Hello, everyone. Welcome to this week's episode of Commission Breath. Brandon Love here with Tom Moffat, and today we have a special guest, Mark Eade. We ran into Mark at the Be the Better Broker event in Whistler, and we realized that for years we had seen his sign downtown Burlington, stumbling out of the bars there. And we got chatting and learned a little bit about his business, and we've been planning on having this follow-up call since then. So, Mark, thanks for jumping on with us.
Hey, thanks for having me, guys.
We've kind of put two and two together because you told us your name. I'm like, why does that name sound so damn familiar? And yeah, it's like right down the heart of Burlington, where we're from. And it goes to show you like the power of traditional advertising still works. Like that name popped into our head. So we really wanted to have you on today, Mark, because we had a really good discussion or conversation at Be the Better Broker event. And we're chatting about how you do both private business and you also still stick on the A side as well. So we wanted to pick your brain as to how you kind of got into the private business and really niche down into that and sort of the pros and cons of each. So why don't you just kind of give us, the listeners, a bit of a history as to how you got in the industry and how you started working on the private side?
Yeah, for sure. So I got into the business in about 06, 07. I was graduating from university and my dad had been a longtime broker. Quite frankly, and one of the people that worked for him as an underwriter, they got their dream job to go work in an art gallery. And fortunately, she left on, it was her dream job. She was working there part-time and they said, hey, will you be the manager full-time? And so he had an opening and I was a university student graduating without a job and said yeah, no, I can do this. And I hung around the office during the summers and done some projects. And so I was like, this sounds kind of cool. I had an economics degree. So I figured, why not? It went from there and the world got really interesting really quick in terms of the 07, 08, 09. Things just sort of went from there.
Nice.
If you can recall, like it was a bit ago, but like kind of like the feeling everyone had back then in a way, because times right now are very similar in terms of like everyone feeling a bit uneasy with the market. Like, do you see a comparison there, or do you think this time it feels a bit different?
It feels different. I started and so I was learning about lenders and there was all these B lenders doing different things. We had Wells Fargo doing no money down with a 600 beacon score, an 8.5% rate with a 4% fee. And like clients getting those mortgages thought that was a great deal, right? They were all excited. And, CMHC was doing no money down on a 40-year AM. And so I had the first year in the business, doing very few deals, but mostly processing paperwork for my dad. And then things all of a sudden changed very quickly where again, I remember being in a golf tournament and like somebody's like exceeds out of money. And I was like, what do you mean exceeds out of money? It's like, the US hedge fund shut them down. And I'll never forget, I had a purchase closing one day with AIG was the default insurer at that time before they became Canada Guarantee. And it was the day they had liquidity issues in the States and we were trying to get an exception. The lender couldn't get a hold of anybody at AIG all day. It was like, because they were all in meetings because literally they were about to go broke in the States. So they couldn't commit to anything. So anyway, in some ways it's very different, but clients are asking the same questions. What's my payment going to be? How am I going to make this work within my budget? And so I would say from the lender's point of view, things are very different, but from the client facing point of view, things are very similar.
Yeah, so often we look at like the lender policies, we look at the rates, and we're looking at all of these like high level, broad scope sort of things. But really what matters to the client is, can I afford this monthly? Am I going to totally screw myself over here? Or can I just do this and tread water for a bit while things hopefully smooth out? And the client just lives in that monthly number. The rest of that stuff, it's just surface level to them.
I mean, I wasn't around in 2008 doing brokering, but I feel like the fear is always going to be the same. It's like you said, the monthly payment, what's going to happen to my mortgage, my renewal. But I feel like this was like a slow progression of like this uncertainty versus like back in 2008, it was like, all right, here we go. Like it just happened more suddenly than what is going down today. And correct me if I'm wrong, Mark, but that's just kind of how I feel.
Totally. Like the asset-backed commercial paper crisis literally showed up overnight. And like AIG went from issuing policies being a huge company and like Bear Stearns stock went from like $100 to zero in like a week. Like one of the biggest US investment banks. And again, that was in the US, but like Merrill Lynch, I mean, everyone loves The Big Short, like Street Capital, we were doing all kinds of stuff on their variables, which was all back-ended by Merrill. After the movie came out, I was like, yikes, I hope none of those were my files in terms of the credit default swaps. But we were very much caught into that. And it wasn't that our clients stopped paying their mortgages. It wasn't that our values went down. It wasn't that the credit quality, went to hell here. It was just very much that the products and the access to those funds went away very quickly.
Gotcha. And like when you first entered in the industry and went out on your own, did you start doing private business or was it on the A side first?
It was a bit of everything. So my dad has this unique model too. And part of it is the area in downtown Burlington we're in. We have good relationships with a lot of lawyers and trustees and accountants. And so they're a really good source of private business. And so my dad positioned himself. And then quite frankly, I followed up with him in terms of like, hey, you got a problem that you need help with? Call me. Like, call me any point in time. Here's my number. Email me. And so we made some inroads with a couple of lawyers who had really well established practices, as well as trustees and accountants and financial planners, so that when they had a client in trouble, we could sort them out. We have got some really good partnerships that way. And that was just sort of what drove the private side of the business. And we, quite frankly, charge really low fees. I know downtown Burlington, you guys know where we are. There's like, 5 or 6 brokerage shops within, a kilometer of us. Our fees on a private are the lowest around. And so part of it was, our deal with our referral sources is we're not going to gouge people. We're going to charge them, a fair rate for their credit and income situation, but we're really going to work to break the cycle. We're really going to work with them to solve their problems, whether that be them getting their accounting organized, whether that be do a lot of work with paying off tax arrears and credit counseling and proposals and bankruptcies. And so that was the sort of deal, was to keep our cost to our end clients lower. And that really worked well.
Yeah, I love that because you build that trust at file after file. It just compounds. And also it gives you a nice insulation. We were just talking about this earlier today about like a lot of brokers, all their eggs are in the realtor basket and they're feeling the burn of that right now. Whereas with you, you have these different referral sources. So if the realtor market dries up a little bit, you still have the accountants, the lawyers, the financial planners still sending you that deal flow.
Absolutely. And again, they're messier files. They're more time consuming. They're definitely not as profitable in terms of like the number of hours, the number of staff hours. One client, it's 113 pages of bank statements over the last 12 months for, a $275,000 mortgage. Like that is not going to be the most profitable file I do this month. But I did his last mortgage and I'm hoping to do the next one, and he's hoping to buy a cottage in 2 years. And so clients want that service. And, we're working really closely with the realtor, working really closely with the lawyer. We had to, ask an appraiser to rush a report, and those things go a long way. And so trying to keep a really positive around our name is really important to us.
Yeah. And I'd imagine you get a lot of A business referrals just from like working with those types of clients, because they're going to have friends and family that are on the A side inevitably, and they're going to rave about what you did for them and holding their hand. And yeah, you look at the hourly rate, it's likely going to be lower on the private side with a lot of these deals because you're working more hours and possibly getting comped less with the smaller mortgage sizes. But yeah, I could see that being a really good referral base.
And those clients are really loyal because they've come in and they've got a CRA lien, they've got a property tax problem, they've got, a mortgage arrears or some other guy that's sticking them to them for a giant renewal fee. And, you can put that deal together. They're no longer rate shoppers when we get them, a year from now back to the trust companies, a couple years from then, back to the credit unions, and a couple years from them back to the banks. Again, the idea is it's a lot of files over a long period of time. And again, they don't forget that you sort of bailed them out.
Yeah, I like that because you're focused more on the lifetime value of the client. That was always one of my things when I was first getting going, was like I would do like the $70,000 mortgage. And I remember we had a coach at the time and he's like, why are you wasting your time on that? I'm like, because you don't know that this person 3 years from now might be a 300,000 file, or they might connect me to 4 friends, or the realtor might be grateful. And that kind of mindset, it did have that compounding effect where I got business from taking these files that other people were just saying, oh no, it's too small, it's not worth my time, I'm gonna get paid less than I would at McDonald's for this file. It doesn't matter. Just service the client. Think about the lifetime value of them, their network, the relationships you're going to grow there. And just, it's hands-on files. The more you do, the more experience you get, the better you get anyways.
Absolutely. And again, I was lucky enough to be starting out too right at a university where I charged $500 on that deal. And I was thrilled to make $500, right? I didn't have a mortgage, living with a couple of buddies, so that I really got into that stuff. And again, our fees are really low on that. So that clients see that, so that you're not perpetuating the cycle and working with them to say, hey, so you've got to pay off this credit card. We're going to clean up this judgment, to get you organized. So when your first mortgage does come up a year from now, remember that the bank didn't help you out. And that's really how we've grown that side of things.
What would you say the percentage of your files are private and B versus A?
I would say right now it's probably 20% private, 10% B, 70% A. A is still sort of the bread and butter of what we do because, again, it pays the bills. And again, the private stuff is really what I'm using as a wealth creation tool in terms of like, okay, lending my own funds, I'm a partner in a MIC, that sort of side of thing is what's going to really help me grow. And that's the more exciting stuff. Again, once people have been at this, for 10 years, you can take an application in your sleep. I was talking to another broker this morning. They're like, why aren't you using Filogix Pro? It's like, I'm really good at Filogix no matter what the system is, just because I've got so many hours in front of it. I could take that app and manipulate it in my sleep. So same with the private side. I like those files because they're interesting. They're not the same. They're always different. So I think that to me sort of keeps my brain engaged. It's not just collecting an employment letter and a pay stub on an A deal.
Yeah, I find sometimes like when you get too much of one thing, you get very good at it, which is nice, but it does get a little like Groundhog Day, which can be really great for certain things like you're consistent in your prospecting. Like Ryan says, grab your lunchbox and go to work and you know what your day is going to look like. Your paychecks are all pretty much the same. It's consistent that way, but I do find my brain, I have like an ADHD mind. I get a little bored and I'm like, fuck, this is getting old. And then I start to wander into different side quests and projects and stuff like that where I just like throw a complicated file in there once in a while. It keeps me.
I was going to say, one of your side quests, speaking of what Mark was talking about with lending your own funds, I remember you called me one day. You're like, I've got this great idea, man. We niche into private and we start lending our own funds. It's going to create this like other side business. I would love that personally, but it's this other thing that you have to build out. And I think you already had that stable base of private deals coming in that it just made more sense for you to open up that opportunity to lend your own funds, I imagine.
Absolutely. And again, in theory, if, you've done this and done it 100 times, you should be able to pick the good ones. And some of it is, you got to start with the small ones, right? Like, right. Somebody calls me for a $600,000 private. I don't have that much money, but I've got the 30s and the 50s and the 70s to do on that sort of stuff. And again, also using that money to reposition deals, to be able to say yes quickly and to execute them quickly has become huge in terms of solving people's problems. To then say, okay, this is going to be a two-step dance. And so we're going to do this really short term while we solve this other problem. And then the answer is we'll be able to, get you to a new mortgage. And whether that might be going from, a TD mortgage to say a First National Excalibur or a home trust mortgage, but getting it all wrapped up and making that payment, as we talked about earlier, manageable is really big in terms of the market.
Yeah, for sure. Those side quests, like Tom kills them all now, so I don't get to go on too many. But there is something there for sure. So
hypothetically, if Brandon and I wanted to go that route, what is like the setup process for a broker to lend their own money?
It depends on how you want to do it. We do our self-directed stuff with Olympia Trust and Everett Trust. So you can do self-directed mortgages as far as like TFSAs and RSPs. It's also a way, quite frankly, to do some, light syndication in terms of, two people can partner on a deal if they both have funds in Olympia Trust. We do a lot of work with them just in terms of, making the back end. They do the accounting, they collect the payments. So definitely recommend someone look at a platform like that. And again, it's not something you can dive into overnight, where you're going to go out and raise funds. If you're looking to raise funds from investors, the OSC gets involved and it becomes very difficult and very expensive and very legalistic. The way we've done it is much more organically. In terms of our MIC doesn't advertise, we have a website, but essentially the website is just so people can Google us and find us. But we have a physical presence. It's not out of the office in Burlington, it's in Hamilton, but we have it and our investors get paid every month and word of mouth. And quite frankly, been really lucky to find some really good partners in that. And we all have our own niches and we quite frankly work really well together. And so it's really helped to expand all our networks.
And Mark, feel free to say the name of your MIC.
So it's BFT Mortgage Investment Corporation. The BFT group of companies was founded by Brent Coleman, more than 20 plus years ago. He actually had another mortgage broker who was a tenant of his. And, that broker couldn't place a $30,000 mortgage. And he said to, Brent, hey, you've got lots of money. Do you want to do this investment? And Brent being the accountant, went through the due diligence, didn't exactly know what he was looking at, but it sort of all made sense to him. And when the second month's interest check cleared, and he was like, this is the greatest thing ever. This is way better than like calculating payroll by hand that he did back then. And so, yeah, he started off on that way and we've sort of joined forces. But yeah, having the ability to do that stuff. We also stick to our local market. So in terms of private stuff, like we're in Burlington, Hamilton, that's the market I know. We're not lending our own funds, on a condo at Yonge and Eglinton. That's just not my market, right? Same sort of thing. I don't know a lot about the Ottawa market. I know it's a good one. I know it's stable. But so we sort of stick to lending in our niche of the world, in our area, where we can be pretty confident on values. We can be pretty confident on what we're lending on in terms of quality. We can pretty easily put eyes on it and know exactly what we're doing. And so we're not trying to hit home runs. We're trying to hit a lot of singles.
Yeah, that's nice too, because you can just hop in your car and go drive by and be like, okay, is this a total shithole, or is this going to be a good property? Versus you get out there and you're like, I'm just going to trust the appraiser or trust the realtor. And there's a lot of things that can go wrong there.
Absolutely. And again, especially before Google Street View, Google Street View has made us all lazy in terms of you can see what the neighbors are doing. But yeah, back when I started, I remember definitely driving to Brantford at one point in time and being like, no, I'm not doing this deal. Have you seen the house across the street? Again, I didn't want to stop for a coffee in that neighborhood. And so I wasn't going to do the loan on it, versus I've definitely done other ones where you go and you look and you're like, yeah, I've met the people, looked in the eyes, they're going to pay. Their income taxes might not all be perfect, but you can get a pretty good sense on people doing things that way. Is definitely huge.
For sure.
That's a great pointer. I feel like if we were to go that route, 100%, we would just focus on one market, because you can't know all of them. And I can see the light bulb going off in your head right now, Brandon. If we're going to go that route, that's all you. That's not my jam. I don't know how to set any of that up.
Yeah, I'm fully focused on growing the brokerage and the book of business. I'm not taking on any projects right now, but I'm writing a book. No, I'm kidding.
Well, if you want to make some investments, we're accepting capital, so we're happy to manage it for you.
There you go.
And that's the other side of things is, helping people grow money and net worth. And, we've never missed an interest payment to an investor ever. In terms of that sort of stuff is, huge in terms of helping people with funds and letting people feel safe with their biggest assets. And again, because I think we do have a physical presence, we have offices. We're not working out of our basement. There's a large cost to running the storefront that we run in terms of property taxes and upkeep and maintenance, but it is a footprint in the community. People know we've been here for 20 years. It really helps with that side of things.
Yeah, I remember when we were chatting, this is actually ringing a bell. You have, I think, 2 or 3 separate locations, and you did it that way, compliance wise too. So all of the MIC and the private deals get done in the one building and processed there, right?
Yeah, absolutely. When I joined up with Brent and Tim to form BFT about 8 or 9 years ago, Brent was running out of our lawyer's office. And so we continued that model, and it just made sense, even when we had space in Burlington. So we sort of run the private stuff out of that one. We've got our staff there. And then sort of the Eade business is run out of our office at 620 Brant Street. Borrowers come here, investors go there, but it also says we have a footprint. Partners and I were chatting, we chat most days, and again, a new investor that had been referred to him. And it's like, hey, they know your office. And they're like, oh, actually, he worked with my dad in the 80s in a bar. I said he was a bouncer. And it was like, my dad worked at the restaurant, and it was like all these small worlds, but his son now works just up the street from us. So it's having those physical locations that have a presence in the community that, essentially, we keep them separate from compliance. Our lawyer is in our office, which really helps us move private deals quickly. That really helps too. And so that's the other thing that's really made our stuff done. And we keep our admin costs crazy low compared to a lot of other lenders. So it lets us, have a good return while keeping our costs well in check.
Nice. And what's the return like right now, Mark?
On our MIC stuff, we pay a flat 8% in terms of that sort of stuff. We lend first at 9 and 10, seconds on the MIC and stuff, mostly 10 and 11. We also don't chase the 13, 14% yields. Somebody tells me, hey, I can get 14% on a second mortgage. I tell them, oh, sorry, that's not for us. Just in terms of, I don't want to be in collection. I want to have enough equity that if the deal goes south, somebody can take us out. So we try and do the good stuff. And again, it's also what makes us money on that is not having debt capital. If you look at private side, it's much better to earn 9% every day of the week than to earn, 12% and then be sitting in cash for 2 months. So that's the other thing that we've done. And so we haven't tried to chase the credit curve. We've tried to, almost have a better quality book rather than a higher returning book, following the model of much more like a fizz guard compared to a lot of other privates that are trying to do the 12 to 14%. And some of the other ones too, like renewal fees. We upped our renewal fees last year from 1% to 2%. But at that point in time, most other privates were into a 4% renewal fee, 3 to 4. And so we upped our fees. Second mortgage, we were 10% interest rate, 2% lender fee for the longest time. We've now gone to probably almost an 11 and 3 model, but 11 and 3 is still pretty cheap compared to a lot of other stuff we do. Our loans are totally open, pay us out at any point in time. So Yes, we don't collect 3-month penalties in terms of that does hurt our yield a bit for sure, but it really helps our borrowers. So the answer is, if you're a broker sending us a deal on the private side, I'm not contacting your client. We have a separate admin business, look after that stuff. But also, like, if you can get their credit fixed and 6 months from now, take them back to their current lender, do it. Work that deal as hard as you can. And so that's really let us have a good, maturity level. Not that we don't want to have long-time clients who always pay on time, because we do, but we want to get clients back from our space, into the B space and back to the prime side, because that's where they can save money and, quite frankly, make money to do it all again.
Yeah. Nice.
I like that. Do you have a minimum threshold for investments required?
We do. And we take money during a couple different ways. We take money in terms of we sell preferred shares in our mortgage investment corporation. We have an administrator's license. So I'm the broker of record for the administrator's license in Ontario, where we do what we call partnering with mortgages. So we essentially are able to have two parties do the mortgage together. One of them's always our MIC, and then bring another investor in. So it lets us do some both bigger deals and some smaller deals. Due to essentially the OSC rules, we have to pay an exempt market dealer to approve all our investors. So it's accredited investors only.
Yeah.
A minimum really turns into about $100,000 on that stuff. We do some work on some Olympia stuff for some smaller amounts for families or friends, or, we've got a couple of people we help out on some smaller end stuff. But yeah, really not chasing that stuff. We don't want to be one of those guys that puts 30 investors into one $200,000 deal. That's an administrative nightmare. Yeah.
Yeah, that sounds like a nightmare.
Yeah. We're also crazy clean on the compliance side of things. So we keep a very tight shop that way.
So let's transition to the A side. We talked about private. I'm curious, like, what kind of complications or any like bottlenecks that you're seeing on the A side today? Like, what are you coming across that is a bit of a pain?
What is a bit of a pain? Right now, it's turnaround times and rates. So, for example, TD has launched their new stuff, but they were, my biggest lender last year on the A side, probably because they do bigger dollar value files. And we were also getting more income exceptions. They have slowed right down rate wise. They've taken themselves out of the game intentionally, but that's really hurt us. We've got a long history with Scotia, do a lot of Scotia business. And Pierre is an amazing underwriter on the BRM side. However, he is incredibly busy. He works from 8 to 6. I will testify that he is, but we are slow right now. We're probably 10 days on that sort of stuff. And so we've got some bottlenecks that way. On the B side, we're really seeing pains on bank statement deals. We try and put a very organized file together very quickly for lenders on that stuff, but how long it's taking lenders to review bank statements, which, again, you want to talk about the worst job in the mortgage industry, like an underwriter reviewing bank statements for deposits for funds going in and out. So we do a lot of due diligence on that stuff, but getting that stuff done quickly, because again, an approval on a bank statement deal, it's not like, hey, I'm holding the T4, here's how much money they made. It's like, well, my interpretation of the bank statement's going to be different than yours. So we're really seeing pain points around document fulfillment.
Gotcha. Yeah, I think that's a common theme with Scotia right now. Is the policies and everything about them are great, except for the speed is always painful. We have a Rockstar BRM as well. And like, we know he's working Saturday, Sunday, he's nonstop going, but it's just can never catch up. They don't allow, from my understanding, them to have assistants or any support staff within the model. So it creates a lot of bottlenecks there. Something that if they're listening, they should change.
It totally does. And also, like, being a BRM, like, that's a senior model. I don't want to date Pierre, but he's been around for a while and he really knows his credit, and the skill set there of being able to work with the credit risk group and get tough deals approved is a crazy skill set. And so it takes the cream of the crop on the underwriting side, not just at Scotia, but it does take somebody that's, got a lot of experience and a lot of banking knowledge, just not on the credit underwriting side, but sort of greater bank knowledge to understand those. Yeah. So we've definitely seen the pain points. Hopefully TD's back in their, new rate sheet and that sort of stuff is getting organized, and we're excited. We're doing some work with BMO. They're growing right now with leaps and bounds. But yeah, the numbers too have just not worked for First National. We're big First National supporters. But yeah, it's been really hard with them. They knew last year was a tough year for them pricing wise. It's really hard to make money as a model line on a 2-3 year term, but that's what made sense for the client. So we did a lot of last year 3-year terms, Scotia 3-year particular, TD. So we did a lot of those just to spread what made sense in terms of best for clients. So lower comp, but again, hopefully getting that client back out in 3 more years.
We're having some luck with BMO too right now. Like, in terms of rates, they're being pretty competitive. Manulife too, we've been in the mix with them. So we're happy there. And from like a perspective on the new setup that TD has. Are you kind of happy with how they rolled that out? Like, do you like that new model?
Quite frankly, to be honest with you, I got to buy a new version of Excel because I can't make the rate sheet work. I'm not the only one apparently who's doing that. So I did the webinar 3 times, but I still can't make the Excel sheet work. I'm interested to see how the math works in terms of that sort of stuff. And again, it's sort of a differentiator. We hate losing deals back to the branch. And that was always a theme at TD. Scotia never seems to have that problem. But we'd always have a deal or two a year that TD, the branch would undercut us. Or I had a deal last year that I got it approved even with a buy down. And, somebody at TD said, I can do better than your broker. So they asked me to cancel the file. And it's like, okay. So like I'm being asked by my TD BRM to cancel the file. And it's like, yep, so it can come back in and somebody else can get paid on it. Like, that's a tough pill to swallow. Mm-hmm. So yeah, TD doesn't ever seem to have been able to sort those problems out as an organization. So that's always been a pain point.
Yes.
I haven't really done a deep dive myself. Our underwriter attended the training. I did hear from someone that the guaranteed pay, if you have a deal that went in first, they aren't honoring that anymore, apparently. And I could be wrong on that, but I feel like they're going backwards on that piece, on that side of things, which I didn't like hearing, but yeah, nothing you can do.
And to me, they've never honored that because, again, they would come to you and you'd have an approval and they'd ask you to cancel it so the branch could do it. And the branch would promise the client a lower rate and a free appraisal and all that stuff. So that's the ongoing problems that sort of we've always had with TD. And again, I'm a TD Bank client, but yeah, we've always had that sort of ongoing problems versus Scotia seems to have a much more better partnership with their branches in terms of we don't seem to have those issues as far as branches stepping on toes and us all looking well. And I feel like BMO really learned from that. And again, hopefully BMO's got that sorted out because yeah, I think they realized that, when those deals go south, it's the 1 in 100, but we all look bad on it and it puts a bad taste in your mouth for a while for sure as a broker. Because again, that client relationship, that realtor relationship is a lot more important than getting paid on that file. And I'm a little worried that TD's making it, a race to the bottom. I heard it's, essentially how low will you go? It's a buy down, it's less commission. But again, if you're just going to let the next broker, the next BRM be in on it for a lower amount, that doesn't work. It's going to be interesting for sure.
Exactly. That was my concern when I heard it rolled out and I was like, I can see some of the advantages of this, but it's ultimately going to end up costing us a lot of money because we're going to be buying down. Someone else is going to say, I can do this. And then all of a sudden it's like, do you want to broker for 35 basis points? And I'm like, I know my model, it's not sustainable to do that. I'm not trying to be the next Ron Butler. But certain people, maybe they'll do a bunch of volume that way. Who knows? We'll have to see how it all shakes out. I do think BMO learned from it. And I think there is definitely room in the industry for a lot of the lenders to start to learn from each other a little bit more. I don't know why they don't borrow and steal from each other more in terms of what works and what we say we like. A lot of it seems to fall on deaf ears there. So,
oh my goodness. So TD puts out a new rate sheet that only works in one version of Excel. Do you really think that no broker works on Google Sheets or no broker works on a Mac? But again, if you're a TD Bank employee holding your TD business card up, the answer is, of course I work on this version of Excel. It's the version the bank gets me. I don't have to buy a computer. I don't have to pay rent. So yeah, I'm interested to see what that happens, what the backlash on the broker side is on the TD rates. But they had to do something to create some parity. And we've seen it, over the years. It's the same story, the implosion of First Line. What did that deal cost them to pay the broker? So the broker made 110 beeps, but then they got these reward points and they got these basis points to buy down other deals. And then they got this volume discount. And then we took them on a trip. And, what was the total cost of that, adds up for the bank. And I think as times get leaner, it's going to be interesting to see what happens. And I think so TD, they need the broker space, but they hate the broker space in terms of, what they want to do versus a branch, as well as a sales force.
That's a great point.
When we were at BC, I'm like, all these lender parties that probably cost them like $100,000, all these different trips, all these different things. I'm like, just give me a lower rate. I would rather just have a lower rate and comp and run my business and not go to any of these events. Not to say I don't like a good party, but I'd rather run my business with better things to give my clients.
Yeah.
And my answer is don't throw me a party. Find my underwriter a phone. I've offered to buy every lender a phone at different points in times. I literally got to offer to buy people a phone to call me back. Hey, do you have an address I can ship a phone to you? Is my bad joke. Literally, I don't need the party. I need, 4 more people chasing documents. And it's great that we're going to have these big high-level conversations and work through big things at those events and how to make our businesses better. But then you come back to the office and you're like, okay, but I just need to get the underwriter to review this appraisal. Well, they're being pulled in 80 other directions is, again, where sort of the nuts and bolts hit the road. Speaking of parties, though, the one I want to talk about, you go to MPC and those things, you never meet your underwriters. I mean, I love the First National ones in Toronto because, again, like I go meet my underwriter. I see my VRM. I see the credit assistant. I love the fact that First National does those a couple times a year. And, again, the whole local Toronto office comes out. Those things go a long way. And I, again, wish that, they'd learn from that. First time I used to do an underwriter appreciation. We'd all go to Toronto and essentially you get to say thank you and have a glass of wine with your underwriter. I think that relationship side of working with lenders has gone away during COVID. And because the bank ends up picking up the bill for it, they just haven't come back.
That's a good point. Yeah. The biggest takeaway at MPC last year was to be able to meet some of like Scotia as an example. I mean, we met him before, but we got to hang out with our BRM some more, and same thing with a couple other lenders. Like if they do more of that, I think that's helpful for sure, creating that relationship.
Absolutely. And especially in the work from home world where, you're not going to be there. It's good to put a name to a face. And also, like, again, at the end of the day, like there's a person on the other side of that. And, when we used to do, 65% of our business with First Line, or at one point in time, we did a lot of business with Desjardins before they merged into Meridian. Like literally, we knew our underwriter. We knew when her birthday was. We knew when she was having a rough week, So again, we also knew when we could push them like, hey, I need you to do this now. We've lost a lot of those things over time, which has definitely made, I think, the business harder in terms of that sort of stuff. Because again, at the end of the day, it's about relationships. Getting that extra deal closed improves everybody's profitability, right? Again, having people look at docs once, tell me how you want them. Tell me how you don't want them. It just really speeds things up and lets us all be more profitable as brokers, as lenders. There's efficiencies to be gained for sure.
Yeah, I think that human element needs to come back. And we were talking about this in a previous episode, that I think it's something that like we're talking about today, but I think it's something that people crave across the board. Like I talk to underwriters and they're like MPC, like I don't get to go, I don't get to meet anyone. We're like, yeah, like actually you're the one we would want to meet with. Like we don't really care to hear about another policy from so-and-so or another little like George St. Pierre. Like I don't give a shit about George St. Pierre. Like, I don't like meeting my underwriter, like learning something that's going to actually benefit my business.
GSP is cool, man. Come on.
The message is like hopefully being heard, and people will start to bring it back a bit because I think everyone is craving that. And the industry does need it.
For sure. And like, again, I mean, I hate portals because, everyone's got one. And I realize there's security around document stuff, but you can't add notes to it. You can't circle something. You can't put a star beside it. Hey, I hope you had a great weekend. In terms of that sort of stuff, you have to start your email with when you're dropping docs into a portal. Again, you're turning into you're right, a branch employee who doesn't know anything and doesn't know stuff and doesn't know about their client or about their lender partner on the other end. And yeah, that just stuff goes a long way.
Totally.
Anything we should touch on, Mark, before we close it off?
I mean, I would encourage every broker getting into this to lend their own money and explore the private side of things. It's very profitable, but it's also a good way to save for retirement in terms of that sort of stuff. And again, it's a side of the business that's never going to go away. The banks are never going to be able to do some of those wacky things that make sense. But from a compliance point of view, you're never going to get through a bank or a deposit-taking institution that can provide really good returns for clients, both as investors and as borrowers.
That's a good point. It's recession proof, or not even recession. Where things are heading in the A space with banks, like that's always going to be around, in my opinion. So I couldn't agree more.
Yeah, absolutely. And again, it's local knowledge because I can't do, my business in DC because I don't know the lawyers, the appraisers, who you can trust, who you can't trust. It's sort of creating your own market niche.
Well, Mark, thank you for coming on today and sharing some of your wisdom with us. It was great to catch up again and look forward to running into you, probably downtown Burlington, but hopefully at other events as well.
That's exactly it. And yeah, we probably get an airplane and see each other again rather than around the corner. But yes, it's great to catch up, guys, and have a great weekend or a day.
Thanks, Mark.
Take care.